Hello, Jessica Amir for the Finance News Network with Antares Equities X20 SMA Model Portfolio Investment Manager, John Guadagnuolo. John, thanks for having us.
Thank you, Jessica.
So first up, we've seen the massive explosion of online retail. What opportunity is there for mum and dad's investors to really take advantage of this massive trend?
Well, obviously there are online retailers, but what we have found interesting is that space is increasingly understood, and the growth rates are understood. What's interesting, we think, is the change in preferences around payment systems for people who use online retail, and we think there are some distinct trends, and we think that there's some real growth opportunities in that space.
You previously spoke about a company called Afterpay. Maybe you can tell us what they actually do and how it works.
So Afterpay is a company that offers consumers a way of lay-buying, effectively, goods that they purchase historically online. It evolved as a transaction tool for people seeking to purchase goods online. These days that's evolved further to the company's developed an app for your phone, and so you can still apply for the same types of services that they offer. The way that it works is that you go on to a shop or online and you purchase whatever it is that you're looking for. Let's say it costs $200. When you get to the checkout, be it in the physical store or be it online, you then engage Afterpay. You select Afterpay as your payment system, and therefore you have to complete the application for that particular purchase. If you haven't been approved before, there'll be a series of questions that set you up. If you have been approved before, then you go a different path. What happens then if you are approved, and bear in mind that 30% of applications are not approved, so it's not just a simple, there's a bit of technology involved about who gets screened in and who gets screened out. If you are approved, then Afterpay will advance $200 to the retailer on your behalf. And you will therefore have to make a series of transactions with Afterpay of equal instalment. In the $200 case, it'll be 4 instalments of $50 each, and they'll be staged fortnightly. Afterpay is paid, you pay nothing for this. Afterpay receives their money as a merchant fee from the retailer, in the way that today if you purchase with American Express or Visa, the retailer pays a merchant fee away to those payment providers. Afterpay receive a merchant fee. Theirs is a little bit higher than a traditional card, but that's because you as the consumer are not paying any interest on your card and you're not paying for a transaction cost.
And John, how does it actually differ from traditional and emerging technologies?
As the consumer, you get to pay over a period of time, so it's lay-by in that respect, because there are equal instalments to be paid at certain dates in time. That makes it quite different. The other thing is that each transaction is assessed on its own merits. So you're not issued a line of credit. So if you apply for a credit card, for instance, obviously you'll have a $1,000 limit or a $2,000 limit. You have that line of credit available to you. With Afterpay, you need to have each transaction assessed, and if at any point in time you've failed to comply with what you've agreed to on a previous transaction with Afterpay and have not put your account back into order, you can't use the system anymore. So there's no ongoing rolling line of credit. And that also makes it quite different to other emerging forms of payment like Zip Money, who do offer a line of credit in that regard.
And what advantages does it really offer the consumer and the merchant above a credit card or a debit card?
It helps the consumer budget. As a consumer also, it allows you to purchase something perhaps a little bit outside the normal size of things that you buy. Most recently, Jetstar's been added into the system, so if you want to go travelling or what have you, you don't have to have that money right there and then, and you don't have to have a credit card. Afterpay is particularly popular with the millennial generation. The average age of the consumer of Afterpay is 32, and they're predominantly female. And so this is interesting information because we're seeing a different pattern of purchasing and payments from a whole new generation of people. And what's also interesting is that they are very loyal to their payment system. There's research around that suggests that millennial generation prefers the payment system it likes and goes looking for that payment system when they decide what they want to buy. And what's interesting is that behind Google, Afterpay is the second highest or second most popular search engine for apparel in Australia. For the merchant fee is higher, it's 4%, whereas a normal credit card, that's the average. Some merchants will pay more and some will pay less. The average credit card merchant fee is just over the 1% mark. So clearly this is a higher fee. It also provides a higher basket size, retailers have found. So people who purchase things on Afterpay generally have a higher transaction value. And the final thing that it does for merchants is that it gives them access to the millennial generation. And it gives them that sale that they wouldn't otherwise have got.
So what are the risks and opportunities?
The average transaction size is a bit over $100. You're not dealing with large transactions. There's a whole lot of small transactions, so there's a huge level of diversification. We also know that the people who use Afterpay have on average very low levels of debt. This company is only 4 years old and it already has 1.8 million customers and 14,000 merchants. And we see that as a real opportunity. They're also going to the United States. There are 13 times the number of millennials in the United States. However, like most companies that go overseas, there are a lot of risks involved in that, and what works in Australia doesn't necessarily work in another country. So large market size opportunity in the United States, but obviously different preferences at a micro level that can't always be seen when you make a decision back in a boardroom in Melbourne or Sydney. So we are aware of that, but we're comforted by the fact that they have a joint venture partner there who is a well-known venture capital firm, and will hopefully shepherd them through some of those more micro risks.
Wonderful. John Guadagnuolo, thank you so much for the update.
Thanks, Jess.